Kylie Jenner's team told Forbes their beauty company, built from her original lip kit launch, made $360 million in 2018. That number landed her on the cover of Forbes magazine as the youngest self-made billionaire ever. It valued her company at $1.2 billion, and it convinced Coty Incorporated to hand over $600 million in cash for just 51% of the business. Then Coty filed their investor presentation with the Securities and Exchange Commission, and that document showed something very different. The real 2018 revenue was not $360 million. It was roughly $125 million. That single discrepancy, that gap between what was claimed publicly and what was filed with federal regulators, set off one of the most embarrassing corporate unravelings in modern beauty industry history. 6 years later, Coty is trading at $1.95. Kylie is locked into a 7-year transfer restriction she cannot exit until 2027. And Forbes has never reinstated the billionaire title. We traced every dollar through the Securities and Exchange Commission filings, the court documents, and the earnings calls. This is the story those documents actually tell, and it unfolds in 5 layers, each one worse than the last. We need to start with something most people never saw, because the deal itself was structured in a way the press almost entirely missed. When Coty announced the acquisition in November 2019, headlines read, "Coty buys Kylie Cosmetics." That is not what the SEC filing says. We pulled the actual Form 8-K that Coty filed with the SEC that month. That form is the one companies must file within 4 days of major events. The entity Coty acquired 51% of was a Delaware limited liability company called King Kylie LLC, not Kylie Cosmetics, not Kylie Beauty, a shell entity registered in Delaware, the state where corporate structures go specifically to stay opaque. The remaining 49% was rolled into a new holding company called New KJ LLC. Buried inside the amended operating agreement was a clause most financial journalists never reported on, a 7-year transfer restriction. Until the 7th anniversary of closing, which is January 2027, Jenner's side cannot sell, transfer, or move their membership interests, except under very narrow drag-along and co-sale rights defined in that agreement. That restriction effectively locks Jenner's side in until that date. In plain English, Kylie Jenner has been legally locked into Coty's management of her brand since the deal closed in January 2020. She cannot leave. She cannot sell to someone else. And even if she could buy back the equity, Coty holds a perpetual license on the brand, which means they could continue manufacturing and distributing Kylie Cosmetics products regardless. Bloomberg and Business of Fashion reported in August 2023 that Jenner had held informal buyback talks with Coty, but the two sides disagreed on price and valuation. No buyback has been executed. The manufacturing relationship adds another layer of complexity. Kylie Cosmetics originally partnered with Seed Beauty for production, but after the Coty acquisition, Seed Beauty filed a lawsuit alleging trade secret misappropriation and breach of contract, further complicating the supply chain dynamics. And in the 6 years since that lock went into place, Coty's share price has fallen from above $11 at the time of the deal announcement to an all-time intraday low of $1.95 on April 2nd, 2026. That represents a destruction of roughly 94% of the company's peak market capitalization. An investor who put $1,000 into Coty stock 5 years ago would have roughly $241 today. If you are finding this useful, subscribe to this channel. We pull apart the financial architecture behind celebrity business empires every week, and the numbers are almost never what the headlines say they are. Now we move to the second layer, which is even harder to believe because it involves Forbes itself turning against the narrative it helped create, In March 2019, Forbes put Kylie Jenner on their cover and declared her the youngest self-made billionaire in history. She was 21 years old. The cover was framed, screenshotted, posted on dorm room walls, and turned into motivational memes by aspiring beauty entrepreneurs from Atlanta to Auckland. The revenue figures backing that claim came directly from Kylie's team. Her representatives told Forbes the company generated $307 million in 2016, $330 million in 2017, and $360 million in 2018. 14 months after that cover, on May 29, 2020, two Forbes staff writers named Chase Peterson Withorn and Madeline Berg published an investigation titled "Inside Kylie Jenner's Web of Lies and Why She's No Longer a Billionaire." The evidence did not come from tabloid sources or jealous competitors. It came almost entirely from documents that Coty itself had filed with the SEC and presented to its own shareholders. Those documents showed that the 2018 revenue the Jenner team had claimed was $360 million, but it was actually around $125 million. That is not a rounding error. That is a gap of 188%. But the discrepancies did not stop with the cosmetics line. When Kylie Skin launched in May 2019, her representatives publicly claimed the skincare line did $100 million in revenue in its first 6 weeks. Coty's own filings showed the actual number was on track for roughly $25 million over 7 months. The publicly briefed figure was overstated by a factor of 4. There is a detail in the Forbes investigation that almost nobody talks about. The original Forbes reporter who wrote the 2019 cover story, a woman named Natalie Robomed, described in a later interview how she had been brought to the family's CPA office in 2017 and shown what she was told were Kylie's tax documents. She initially went with a more conservative estimate. Then another outlet published a higher number that Robomed suspected came from a second briefing designed to replicate her meeting. Once that higher number was in the market, Forbes raised its own estimate to match. The reputation of the company, as Robomed put it, caught up with the numbers she was seeing on the documents. Forbes recalculated Kylie's net worth to just under $900 million and stripped the billionaire designation. Kylie responded on social media that morning, calling the article inaccurate. Her attorney, Michael Kump, issued a formal demand for retraction. Forbes never retracted. There has been no public SEC enforcement action. But the corroborating evidence sits in Coty's own regulatory filings, and those filings have never been amended. Now we enter the third layer. This is the corporate wreckage inside Coty itself, and it tells us what the Kylie deal actually cost the company that signed the check. Coty's all-time stock price high was $32.68, set in July 2015. By the time they announced the Kylie deal in late 2019, the stock was already down to around $11, crushed by a catastrophic $12.5 billion acquisition of Procter & Gamble's specialty beauty brands in 2016 that had generated over $3 billion in goodwill write-downs before the Kylie deal even happened. The Kylie acquisition landed on top of existing structural damage. Coty does not break Kylie Cosmetics out as a standalone line item in its goodwill disclosures. The brand is folded into the prestige segment, and that prestige goodwill pool has absorbed more than $3.1 billion in accumulated impairments since 2018. Coty has never publicly written down Kylie Cosmetics by name, but the pool it sits inside has been gutted. The timeline of destruction after the deal is relentless. In December 2025, CEO Sue Nabi was replaced after 5 years. Marcus Strobel became interim CEO on January 1, 2026. In February 2026, Coty reported second quarter results that missed Wall Street expectations by 22%. The stock dropped over 8% after hours, and then continued falling. In March 2026, Coty withdrew its full-year guidance entirely and warned that third-quarter operating profit would come in at roughly $100 million versus $204 million the prior year. Deutsche Bank and Barclays both cut their price targets to $2. On March 23, 2026, a federal securities class action lawsuit, Srinivasan versus Coty, was filed in the Southern District of New York, alleging securities fraud and misleading investor disclosures. There is also the Kim Kardashian situation. In 2021, Coty invested $200 million for a 20% stake in Kim's SKKN by Kim skincare line. In March 2025, Coty divested that stake and booked a loss of $71.1 million. That is the only celebrity beauty impairment Coty has disclosed by name, and it functions as a direct preview of what an unwind of the Kylie position could look like if it ever reaches the balance sheet. We are now in the fourth layer. This one is about what happens when the core brand stalls and the founder starts launching new ventures faster than the old ones can prove themselves. Kylie's clothing line, launched on November 1st, 2023. It was built in partnership with Jens and Emma Grady, the same husband and wife operators behind Kim Kardashian's $4 billion Skims empire. The launch model was a drop-based collaboration platform pairing Kylie with small independent designers for each release. The first drop generated massive social media engagement. The Instagram account gained over 400,000 followers in 4 days. Selected items sold out immediately, but by late 2024, Kylie had taken full creative control from the Greedys. The collaboration model was abandoned, and in November 2025, KHY quietly relaunched as an evergreen wardrobe-first fashion label selling cotton basics. No revenue figures have been disclosed. The pivot from designer collaborations to leggings and shorts tells its own story. Then there is Sprinter, Kylie's canned vodka soda brand, launched March 21st, 2024. The company's public relations team announced 140,000 cases shipped in the first month across 10,000 retailers in 44 states. Those numbers are self-reported. No third-party audit has confirmed them. By September 2024, just 6 months after launch, Sprinter had already pivoted into a non-alcoholic hydration powder called K2O, complete with collagen peptides and hyaluronic acid. A new chief executive officer named Jay Hunter was brought in. When your vodka soda becomes a collagen supplement within 6 months, the original business model did not survive contact with the market. We are now at the fifth and final layer. This is where we recalculate what the empire is actually worth today, using the numbers from the public filings rather than the numbers from magazine covers. Forbes currently estimates Kylie Jenner's net worth at approximately $670 million. Celebrity net worth puts it at $700 million. Both figures anchor heavily on the 2020 valuation of Kylie Cosmetics at $1.2 billion, assigning roughly $469 million to Kylie's remaining 44 to 49% stake. But that anchor was set 6 years ago, when Coty's stock was higher and the brand narrative was intact. Coty's own interim CEO stated in early 2026 that the company had grown Kylie Cosmetics revenue by roughly 1.5 times since acquisition, applied to the verified $177 million baseline from the deal closing. That implies a current run rate of approximately $265 million. Now compare that to the competition. Selena Gomez's Rare Beauty, launched the same year the Coty deal closed, hit approximately $540 million in revenue by 2024 and is valued at $2.7 billion, differentiated largely by its mental health mission and cause marketing approach. Hailey Bieber's Rhode, launched in 2022, was acquired by ELF Beauty in May 2025 for roughly $1 billion. While beauty conglomerates like LVMH, L'Oreal, and Estée Lauder continue to acquire independent brands at premium multiples, Kylie Cosmetics, the company that Forbes once called the engine behind the youngest self-made billionaire in history, is generating roughly half of Rare Beauty's revenue and has not received an independent valuation since the numbers fell apart. If you apply a realistic multiple of 0.5 to 0.7 times revenue, which is standard for a celebrity beauty brand without independent growth momentum, the implied enterprise valuation of Kylie Cosmetics falls to somewhere between $130 million and $185 million. Kylie's 44 to 49% of that range would be worth $60 million to $90 million, not $469 million. Add her real estate portfolio, anchored by a $36.5 million Holmby Hills compound purchased in April 2023, remaining cash from the original Coty sale after taxes, and annual income from endorsements and royalties estimated between $40 million and $100 million per year. The marked-to-market net worth lands somewhere in the range of $300 to $400 million. Wealthy by any standard on the planet, but not a billionaire. Not close. And moving in the wrong direction. The Forbes cover from March 2019 still exists online. You can find it with a single search. Kylie Jenner, age 21, youngest self-made billionaire. The SEC filings from that same period also still exist online. And those filings tell a very different story than the one on that magazine cover. The transfer restriction expires in January 2027. Whatever happens next will finally show whether the empire behind the cover was real, or whether the cover was always the product. If this breakdown changed the way you think about celebrity business valuations, hit subscribe. We pull apart the real financial architecture behind famous names every single week. The story behind the next video is already in production.